a minute or so. If you have any questions, go ahead and raise your hand or put them in the chat. And Chris is going to be monitoring that during the workshop today. And then we're going to be taking questions in the end. Chris, you have the ability to get into the chat, right?
I have the chat open, yes.
Beautiful. Well, first of all, I want to thank everybody. My name is Amy Bonus, and Chris Hutchinson is also on the call. He's my right-hand person on my team. And we are excited today to have you on this webinar with us. It is pretty interesting times right now. It is sort of like a perfect storm in that people have been unable to buy a home and see it before they have bought it. So now is a good time because interest rates have gone up a little bit. And what that does is that creates less competition for people to buy homes. And you have people that have been wanting to buy a home for the last 2 years. They have been unable to get into the market because they do not have $50,000 or $100,000 or $20,000 due diligence. And now they can get into the market with a lot less due diligence. Hi, Matt Farnsworth, how are you? And so we're really excited to share this with you, but you'll find that in the next year or two, there's going to be a lot more first-time buyers that are going to be able to take advantage of the market. They have been wanting so much, like I said a second ago, to get into the market, but they have not been able to emotionally and intellectually buy a house without seeing it. And many people in the last year or so have bought houses without even walking into them. And so these first-time buyers, the biggest obstacle for first-time buyers or for buyers in general has always been that they do not have enough cash to buy a home. They don't have enough upfront money. That's not like they have $100,000 upfront to put into a house. In fact, sometimes they may have just a few $1,000s. And so that is the biggest obstacle. But you'll find that real estate has made more money for people than all other businesses combined. And so if you have not bought a house, if you don't own a house, then you should buy one. In fact, if you already own a house, you should buy two. If you own 2 homes, buy a third one. And then if you have 3 homes, why don't you help your friends and family buy another one or buy a home right now and maybe gift them money instead of leaving it to them as an inheritance or something like that, because you will find that, like I said, there's going to be a window of opportunity in the next 12 months to buy a home for first-time buyers. A first-time buyer, just out of question, like for the people that are on the webinar, we have 26 participants today. Could you put raise your hand in the chat and let us know how many of you are first-time buyers, or raise your hand so we can see that. We assume that a lot of people on the call today are first-time buyers, but there are different down payment assistance programs out there. So some of the down payment assistance programs are geared towards first-time buyers and some are not. It has always been a dream of Americans to own a piece of the rock. They don't want to just rent. And rents right now, particularly in North Carolina, one of the most popular places to move and relocate in the country, are reflecting the price of the homes that people are living in. So they're reflecting the housing supply. So if there's less houses out there and more people moving to an area, that causes rents to go up. And I have heard that the average rent in the Raleigh area, but I mean, this is just Raleigh, is close to a couple $1,000s a month at this point, which is like, wow, that's out there. So if you want to buy a home, My question is to you, why? If you guys on the call today, can you do me a favor and put into the chat why you want to buy a property right now? Like, why now versus a year ago or 2 years ago or 5 years ago or 10 years ago? And if you're a realtor on this webinar today, can you tell me what your clients are telling you? This is mostly a curiosity thing that I like to know, and we will share the responses to the chat when we are sharing the questions and answer at the end, so that everybody can learn. Development in this area continues to boom throughout all of North Carolina. I'm a member of the tourism board here, and what is happening here in North Carolina is unbelievable. It's crazy. It's not just the Triangle. In fact, the Triangle gets a lot of publicity, but a lot of the outlying areas are also building huge developments. In fact, companies are spending millions and some billions of dollars developing the infrastructure here in North Carolina. So to support all the growth, major construction projects are underway. A lot of the developments now you'll find are mixed use. So they might have retail space on the bottom. There are 5 cranes. Like, it almost looks like you saw Singapore many years ago, these huge cranes that are in the middle of Raleigh and Cary right now, making these skyscrapers here. So we have no idea, as just a normal consumer, the development that is happening here, but it is absolutely huge. And this is just going to continue, to grow. They don't forecast this area like having a huge problem with housing. Like, they don't see housing prices falling off of a cliff here or anything like that. And that's primarily due to what is happening with the census tracts right now. The census figures in 2020 show that millennials between the age of 26 and 34, a lot of them are 26 right now. That's when they move out of their parents' house. Like, they moved out and now they went back. And at the age of 26, they're like, I don't really think I want to rent with my parents anymore. I'm going to move out and I'm going to rent. And the census figures showed that when a millennial hits the age of 34, they're done renting and they want to buy a house. And so between the age of 26 and 34 is a span of about 9 more years that we are going to see a tsunami of first-time buyers hit the market like we have never experienced in America before. And this is the largest population, even larger than baby boomers, who are going to be fueling the housing market. So that's why we don't feel like we're going to see a housing bubble, is because it's basic supply and demand. Now, since the biggest obstacle to home ownership is cash to close, what zero down programs are available? And first of all, if you are a veteran, thank you for serving our country, and the country thanks you by allowing you to buy a home with zero down payment. Doesn't mean zero cash, but zero down payment. If you are not a veteran, the down payment assistance programs will help you. And there are also USDA, United States Department of Agriculture loans that you are able to get. I do want to just mention to everybody that we're going to go through this really briefly today, but buying a house does require that you have some money. Okay, you have to be able to pay your first month's mortgage upfront. Even when you rent a house now, you have to pay your first month's rent and a security deposit. When you buy a house, it's the same thing. You're going to want to do your due diligence and make sure that you understand what this property has as potential issues. So you're going to get an inspection, you're going to get an appraisal, you're going to get a termite report. So you are going to need, some money to buy a house. If you don't have any money, then you maybe want to be in a situation where you can save a little bit before you get yourself into like the home ownership game type thing, right? So just be aware of that. This is the USDA map. Now, USDA allows you to get into a home with very little mortgage insurance on a monthly basis and zero down payment. There are income limits on this program. They're pretty generous. Chris, aren't they like 110 for a family, right? A family of two, or 126 based on the different geographic areas. The reason that I have the map up on the screen is you'll see that the yellow areas are not USDA areas, okay? It's the outlying areas, like some areas of Wake Forest, but in the middle of Raleigh, in the middle of Wake Forest, in the middle of Durham, these programs are not available. In that case, you're probably going to be using down payment assistance, but USDA, not all lenders do them. United States Department of Agriculture, they're phenomenal loan programs. And we have a lot of borrowers use this program. And in fact, you can use this program in combination with another program, which is a first-time buyer program called the MCC, or Mortgage Credit Certificate. By the way, with USDA, friends, you do not have to be a first-time home buyer. In fact, you could have sold your house yesterday and today get a USDA loan. Okay, any questions? Just put them in the chat. We're going to be monitoring those. Chris is monitoring those. So I just wanted to let you know that. So there's VA loans, there's USDA loans, and there are 3 different down payment assistance loans. Now, some of the credit unions have zero down programs, but unfortunately, they are adjustable rate loans. And with adjustable rate loans, you cannot get these special government programs like the Mortgage Credit Certificate program, because these government programs mandate that you get a fixed rate product. So the 3 down payment assistance loans that are out there are, number 1, the one for first-time buyers. This one for first-time buyers today gives all first-time buyers that qualify for this program $8,000 towards the purchase of their first home. We'll go into a few details in a second, but the second program that's out there is you can own another home and still get down payment assistance. People think that down payment assistance is only for first-time buyers, and that is absolutely not the case. You can literally own another home and get down payment assistance to buy your next property that you're going to live in. It's for a primary residence. And the government will help you do this, believe it or not. So the interest rate is going to be a little bit higher than the first-time buyer programs, but it does exist. And the third way to get down payment assistance is to use the Chenoa FHA option. And we like this option a lot if you have lower credit scores. This is the only down payment assistance loan or zero down program, except VAs, that will allow you to do basically no down payment on a manufactured home. So the Chenoa FHA option is a good way to buy a manufactured house with zero down payment. Now, friends, as homes increase in value, okay, like in California, a first-time buyer home, which is 900 square feet, is going to cost somebody $1 million, $1.2 million. That's how much houses cost. A first-time buyer cannot afford to buy a house like that. So what you're going to see is you're going to see people, it's their dream to buy a house. So they're going to move to more outskirt areas, and the outskirt areas are going to allow them to get these USDA loans. You also see a trend of people saying, gosh, I want to get back to nature. I don't want to live in a postage stamp house. or a townhome. I want to live in the country. And you'll find that that's why a manufactured home may become more popular, although there are certain stats that show that manufactured houses appreciate at different levels than stick-built homes and so on. People don't care. They want to have their own piece of their rock on a little piece of land. They're going to have a septic system. They're going to have a well, and they're going to live a little bit farther out in a manufactured house. And that's good. And we can do those programs with the Chenoa FHA option. So those are the three basic programs. Now, the first one that Chris and I want to go over today is this first-time homebuyer program, the $8,000. We have seen this program. It doesn't typically run out of money. People always ask us that. Hey, Amy, when is it going to run out of money? Well, they change the program. Sometimes the down payment assistance program is $6,000, and sometimes it's $10,000. In certain zip codes, it's been more than that. So there is talk that they are going to change the program. But since first-time homebuyers have not been able to buy homes the next couple of years, we do not see it going down. It may go up from $8,000, but nothing has been told to us about that at this point in time. What is a first-time buyer? First of all, you could have owned a home 4 years ago. You just have not owned a home in the last 3 years. And the government is going to ask you for a copy of your 3 years of federal tax returns to show that you have not owned a home. Okay, so the tax returns are not looked at necessarily for your income, but they're looked at to show that you have not taken an interest deduction. With these first-time or these down payment assistance programs, typically they have a little bit stricter debt to income ratios. So if you are buying a home on the down payment assistance program, you're probably going to qualify for a little less than you are if you have your own down payment. And I think this really makes sense to people, because if the government is giving you half the money that you need to buy the house, then they want to make sure that you're not exceeding certain income to debt ratios. There are income limits on these programs. They're somewhere around 100,000, but they could be less based on the different counties that you are buying in. You have to have a minimum of a 640 score with this program. With the Chenoa program, you can have a different credit score, but with this program, it's a 640 score. And in fact, friends, if you have below a 640 score, you can still get a loan, okay? It's just that what you pay for that loan is going to require a little bit more cash, because you're going to have to pay a little bit more in closing costs. Currently on this program, the maximum sales price is up to $385,000. And in these outskirt areas, and people are moving to these outskirt areas now because they can work remotely, at least one person in the household. You can buy a nice house for $385,000 in some of these areas. This $8,000, if you live in the house a long time, is forgivable. Wow, you don't have to pay it back if you're going to live there 15, 20 years. You don't even have to pay it back. There's no geographic boundaries. And you are able to buy single family homes, which is what most people buy, townhomes, which are a lot easier to buy than condos, and some condos, which are eligible. No manufactured housing on this first-time buyer program. If you are a current homeowner, then they don't look at household income. They only look at the income that is on the application. There's not a maximum sales price on those programs. It's just that if you exceed the person's income requirements on the application, you're probably not going to be able to buy more than 400 or 420 or something like that, but it's going to be based on your income to debt ratio. They will give you 3% of the sales price. So if you're buying a $300,000 house, then they're going to give you $9,000. Again, they're going to give you this down payment if you have a 640 score, and if you are buying a single family home. If you are buying some condos, they have to be, certain lendable condos, we call them warrantable, and townhomes. Chris, is there any questions that you want me to answer at this point in time?
Well, we've had some good questions that have been answered, such as, is a first-time home buyer a homeowner who has not owned a home in the last 3 years? And which is correct. That's the definition of one. Another is, for example, Cindy had given us the question. Cindy Smith, if I can go back and find that real quick. Cindy Smith, well, actually, that was Cindy Smith's question. Chantrell asked, is there an exact amount for the second and third programs, which Amy mentioned it was $8,000 for the first-time home buyers. 3% of the loan amount is for this program that Amy's currently talking about. And Chenoa is 3.5% or 5% of the purchase price, depending on the program.
A lot of the Chenoa, the people that are using Chenoa are typically going with the 5% down payment option because you're paying a little bit higher fees on the Chenoa program because it has a lot more leniency with the credit scores, with the income to debt ratios, with the income and the type of property. So you do have to pay back the second mortgage on the Chenoa program, so your payment is going to be a little bit higher. But it allows you to buy properties that the other programs don't allow you to buy, and it allows you to buy with a lower credit score. So as in life, there are pros and there are cons. Now, when you buy a house and you are preparing to buy a house, by the way, our next webinar is in November, and we are going to be starting a home buying coaching program for free for our clients, where we are going to coach you how to buy a house and go from renting to owning in 100 days. Now, if that's assuming that you can save the money and that you can, that your credit score is good enough, but we're going to be limiting the space on these coaching programs. So I'll tell you a little bit more about that, but we're really excited to start it. To have a successful mortgage, to have a successful approval, you need 3 C's. The first C is the capability to pay back the loan, which is your income. It's your income that you declare. It's not income that you get paid cash unless you're putting that on your tax returns, right? It's also the second C is your credit, is your credit worthiness. It's not just your capability to pay back the loan, which is your income. It's proof that you have paid back your bills in the past, because if you can pay your Citibank on time, and you pay your rent on time, that shows that you're more apt to pay your mortgage on time in the future. And lastly, it is the savings and down payment and closing costs. The last C, though, is the collateral. The collateral is the house. So your income, your credit, your savings, your character of saving money or not saving money determines the type of programs that you can qualify for, and the property itself. Like if you are buying a rehab property, then that type of property requires a rehab loan. And in this market, these rehab loans currently are still not really going over well with sellers because they're going to take a couple months to close. You're going to have to involve a general contractor. It affects your income to debt ratios. You need a down payment. You can't get down payment assistance. So it has to be a lendable property to get the down payment assistance or on any of these programs. It can't be, that there's holes in the roof or that there's no flooring or that you have to redo the whole house. Okay. In that case, you need a rehab loan, and you definitely need money to do a rehab loan. Okay. So those are the things that you need to have a successful mortgage. Basically, a job, you have to have some type of credit, and you do have to have some funds to close. You cannot get your offer accepted without being pre-approved. Being pre-approved requires that you have your credit pulled. We can't approve you based on, what somebody tells us is their credit score. You also need a really good buyer's agent in this market. If your mom just became a realtor, it probably would be, sexy to have her maybe represent you, but it's hard to deal with a brand new agent when the listing agents don't know who this person is. So you have a better chance of getting your offer accepted with a local lender and with a really good buyer's agent. You also have to not give up, not be bummed out that your offer is not going to be accepted. Like, it's not going to be accepted probably the first time around. You're learning, it's a learning process, right? It's a journey when you're looking to buy a house. You have to be realistic. You're not going to get the house at $40,000 under the ask price, probably. You're not going to ask them to fix the kitchen cabinets and pay all of your closing costs. Now, when you do find a house and you want to make an offer on, if it is a good offer, it's not $40,000 below the ask price or something like that, we can call the listing agent for you and help you get your offer accepted, because listing agents know us. They know that they can count on us to close the loan, and that we would not tell people that they're qualified if they're not. So after you make a decision to buy a house and you get pre-approved and you find a buyer's agent and you go shopping, then you're making an offer on a house. You're going to do your due diligence. You're going to get, maybe some inspections done. We're going to do an appraisal on the property, and then you're going to close. And this is like the first step for many people in building financial independence. My husband and I were talking, we were eating dinner last night and saying, imagine if you could go back 25 years in your life and you knew what you knew now, but you knew it 25 years ago. And we were talking about, he asked me, Amy, when you were 25 years old, what would you do? And I was like, I'd buy as much real estate as I possibly could. And I mean that, because it doesn't matter where you buy real estate. If you hold real estate long enough, you're going to hit a home run. So you don't have to hit a home run when you buy it. If you just hold it long enough, it will turn into a home run. Now, remember, we told you need a down payment. You need due diligence money. You're going to need to pay your first month's mortgage, your property taxes. These are called prepaids. And you also have closing costs. Sometimes you may be in a bidding war on a property and you will offer more than the purchase price. In fact, this has been quite common the last 6 months. It's still exists, but not to the scope it was. And you may have an appraisal gap. You may buy this property for $450 and it only appraised for $440. And then you have this appraisal gap. And the question is, who pays that gap? Either you do, or the seller does, or a combination. So just be aware of that. The pandemic has allowed people to work remotely. That means more people are willing to move out into the country. They don't have to commute. There's a lot of pent-up demand in home prices from the lockdown. There's a lot of pent-up demand in people that have not had all this extra money. There's all these companies moving into the area in so many cities. I mean, not just here in Raleigh, but in Charlotte and Holly Springs, all over Raleigh. I mean, all over North Carolina. People are moving into North Carolina because they are saying that North Carolina has affordable housing. It's going to continue to be a steady real estate market here. We also have, just FYI, when you're going online and you're looking at mortgage calculators, they are not very accurate. Do not assume that you're going to get a 5% rate. The rates they're targeting 8%, like a pretty normal interest rate over the last 30 or 40 years is somewhere around 7.5%, 8%. Also, the credit score that you have ability to see is a consumer credit score. Okay, we use a mortgage credit score, which adds a layer of risk in. And so typically mortgage credit scores are a little bit lower than consumer credit scores, okay? And so you don't have access to a mortgage credit score. It has to be pulled by a mortgage company. The best time to buy a home, friends, is between now and February. There's less competition. Winter conditions, people are like, well, I don't really want to go outside. It's cold, it's rainy. Perfect time for you to buy a house. It can be easier for you to find a moving company. Real estate agents have more accessibility. They can move faster because there is less buyers that are buying. So this statistically is the best time to buy a house and when you will get the most house for your money. Getting pre-approved, you probably want to, if you're buying in the spring, get pre-approved somewhere around December. You want to make sure that we review all of your credit and assets. You may not have all of your assets, but that's okay. We can pre-approve you subject to you having them. Like, so as long as we have a plan with you, we'll coach you on that. We can still approve you. Most listing agents really don't want you to use an online lender that they cannot call and go bang on the door. What's going on with my loan? So local mortgage lenders will help strengthen your offer. If it's not us, you know, our corporate office for the whole country is in Apex, North Carolina, then please use another local lender, but you'll have much better luck getting your offer accepted if you're using somebody like us to help you. Just a little thing about new construction. New construction is taking on average right now 16 months to build a house. Interest rates have gone up over 3% in the last 12 months, and you typically cannot lock your rate until the kitchen cabinets go in. So you may not even be able to afford that new house if you decide that you are buying new construction. You may not qualify anymore. And 99% of builders are not closing on time. DHIC, you might have heard of this program. It gives people, excuse me, up to $50,000. The income requirements on this program are low. And you also typically have to buy a home that's less than 10 years. And if they find things wrong with this property, the seller could be penalized and fined and told to fix these things, which makes these programs almost impossible for you to get your offer accepted. That, in addition to they can't give you a close date because they really don't know when they're going to get the money to give it to you. Sellers are not like really hip on accepting these offers. And so although we do them, and we do them well as they can be done, I should say, the down payment assistance programs are much more friendly for you to get your offer accepted, okay? So down payment assistance, mortgage credit certificate programs, you can easily close within 3 to 4 weeks, really. And this will help you get your offer accepted. How do you start? We have to have some basic information from you so that we can get you pre-approved. And from here, I'd like to just pull up questions and go through whatever questions you guys have. Chris?
Absolutely. We have a question from Cindy. What is the max home price for the first-time home owner in Wake County? And what about the Chenoa program?
There is no maximum income for the, maximum sales price for the Chenoa program. And the first-time homebuyer program, and I'm going to send you a copy of these slides right now. It's on the slides so that you can refer back, but it's $385.
And Brittany Thornton her question is, I live in Apex, name and address, please. Brittany, are you referring to the name and address of our office?
Correct. The mortgage office, yes.
Fantastic. We're going to send that right over to you. Are
It's
you
on
registered?
Salem Street, Brittany, but it's not an office that you're going to be able to pop by there.
That's the
That's our
corporate
corp-
office.
That's our
Yeah.
corporate office, and it's on lockdown. Like they don't let people into that office, like, because all the secondary marketing and underwriting and CEO and stuff like that is there. I happen to mention that our corporate office is in Apex because even though we're licensed in 40 states, it's nice to have, you know, our corporate office right here because we live and operate in North Carolina. Does that make sense? So if you want to make an appointment, let us know and we can set you up here in our office, but you won't be able to go into the Salem Street office. What else questions, Chris?
Brendan Vrooman, she asked, what if the buyer wants to build? And I responded that there aren't any construction loans through the North Carolina Housing down payment assistance.
If you do want to build, we do have extended lock programs, but whatever the builder tells you that they're going to close, 99% of the time they close 4 to 6 months later. So we can lock you in for 6 months, which is a huge length of time, with no money upfront. Okay, great. So you lock in a loan and you think that you're going to close in November, December, January, February. So we lock it through March and they don't close, and you lose your rate lock, and they won't pay for it to be extended because they'll blame it on COVID, on the supply chain demand issues and things like that. And you may not close until August. Like you literally, it takes 14 to 16 months to build a house. So even though we have extended lock programs, until you actually have a firm close date, you cannot really use them, you know, with much success. What else, Chris?
Adrian asked, are there income restrictions for the down payment assistance programs, the 8K and the 3%?
Chris, you want to take that?
Yeah, absolutely. Each program, well, these two programs have county restrictions as far as the income. So depending on which county that you live in determines what those income restrictions are going to end up being. So for Wake would be a higher income cap that would be allowed than compared to, say, Robeson County. So each county is different and it determines where you're looking at purchasing.
What else? Any other questions?
Just a lot of thank yous.
Okay, good. Well, I really, really, really appreciate you guys being on the call. If any of you are interested in entering the coaching program, like I said, there's not going to be a charge for these programs. You may have particular questions that you want us to answer. Don't be scared to start the approval process. Like, people think they have to be perfect, and there's really nothing in life that's perfect. So if you are considering buying a house, we will help you put together a plan and help you do it, because we believe in real estate so much that we are going to help you in every way possible to be ready to buy the house. If you need to get your credit score up, we're going to help you do that. If you need to find creative ways to get money, we're going to help you do that. When you buy a house, it is a dream, and we love being part of that dream. Also want to thank Karen Boone, who helps a lot of our clients, helps sponsor these workshops for us. She's a great homeowners insurance agent. In fact, I have insurance with her, and this is what our next topic is. So please feel free to reach out to us. You can call us, you can email us, you can sign up for the next webinar today. And I want to thank you guys for being here. Chris, anything else?
And other than just, if you have any questions at all, please reach out to Amy or myself regarding these matters for the down payment assistance, and we'll get you the information that you need.
And agents, just one thing, don't be nervous about lower due diligence monies now. We have seen people get offers accepted in Cary with $1,500 and $3,000 due diligence. And it has changed a lot in the last 6 weeks. Okay. So if you guys have any questions, let us know. Hope to see you again. Please reach out to us, Amy@amybonus.com, and have a great day, everybody.